I get it. Investing can be scary. No one wants to lose money. It's hard enough to save up, and who wants to risk it on some stock or mutual fund that might not pan out? What if the market crashes? Or what if I pick the wrong company and they go bankrupt? No. You want your money to grow. And that's why I put together this list of 2 top investments to make when inflation is high. To be sure, this isn't a short-term trade idea. These ideas take the long approach because slow and steady wins the race in a market like this. 2 long-term stocks to invest in when inflation is high. CPI surged 7.5% in January 2022. And while the Fed is shifting their narrative, saying that while inflation is transitory, more aggressive measures may be necessary, sooner than later. And to many on Wall Street, that could mean a 50 basis point hike as early American Samoa next month. The following 2 stocks are ideas that investors might consider holding for the long haul. The companies: Coca-Cola, Cl. On Thursday, February 10, 2022, Coca-Cola reported results for the fourth quarter of 2022. Cl beat on both the top and bottom line. For example, revenue jumped 10% YoY to $9.464 billion. And this should be no surprise. Coca-Cola started in 1892, and today, it owns or licenses more than 500 brands of non-alcoholic beverages that people like you and I consume daily. These include Aid soy-based beverages, Ayataka green tea, Dasani waters, Del Valle juices and nectars, Fanta, Georgia coffee, Gold Peak teas and coffees, Honest tea, Minute Maid juices, Powerade sports drinks, Simply juices, Smart water, Sprite, Vitamin water, and Zico coconut water. Not only that, but Warren Buffett loves Coca-Cola. Investors love Coca-Cola for their durable competitive advantages, i.e., it's a monumental feat to compete with them, and their ability to withstand price increases. Think about it. If a can of Coke today costs 90 cents, and due to inflation, it then costs $1, will you stop buying it? If you're like many, you'll continue buying it and moving on. Furthermore, Coca-Cola is a dividend king, a company that has raised its dividend for 50 consecutive years or more. The company has a dividend payout ratio of 70.77%, meaning they keep the remainder for other purposes, such as growth acquisitions. And that means their dividend yield of 2.77% is probably safe for many years. Colgate Palmolive Cl. Colgate Palmolive is another durable company that has been around for over 120 years. Its most notable brands include Colgate toothpaste, Palmolive dish soap, Irish Spring body wash, Ajax dish detergent, Soft soap liquid hand soap, and Hill Science diet pet foods. It may be a surprise to some, but Colgate actually sells more toothpaste than any other company in the world. Its Colgate brand alone holds a commanding market share of all manual toothbrushes sold worldwide. Thanks to the company's low-cost products, inflation isn't likely to impact the company over the long term. Like Coca-Cola, if your favorite bar of soap costs $1.29 today and rises to $1.49 by year-end, will you really end up switching brands? Investors love Colgate for its low-risk industry, high barriers to entry, and stable dividend. Like Coca-Cola, Colgate Palmolive is a dividend king, having increased its dividend 58 years in a row. Imagine getting a raise from your job each year for 58 years. That's how investors feel about owning Colgate Palmolive. And dividends aside, Colgate Palmolive's share price has appreciated over 120% in the last decade. Yet today shares trade around their 200-day moving average. The 200-day moving average is the average closing price over the previous trading periods. Traders like to use it to determine whether or not a stock is overvalued. And with Colgate Palmolive's 200-day MA being $80.16, the stock currently trades at a discount of just over 0.5%. Final thoughts? Investing for the long term is key to beating the current inflationary headwinds. Picking companies with durable competitive advantages, especially those that can withstand recessions' price hikes, while continuing to increase their dividend is never a bad idea.